My guest this week is Mark Thompson, Equity Release Specialist, and we're discussing the importance of having a third-party referral set up for all your equity release opportunities. Welcome to the Mortgage Broker Broadcast with me, Craig Skelton. Join me every week where I'll be developing your knowledge to help you build a successful mortgage broker business. Without further ado, welcome to the podcast, Mark.
Morning, Craig.
How are you?
I'm good, thank you. Very good.
First of all, obviously this is an audio podcast, but we just need to talk about behind your head on the wall is your, I'm guessing, a little snippet of your guitar collection. So are you a keen guitarist then, Mark?
Well, back when I was about 20, it was either motorbikes or guitars, and unfortunately there were a few deaths on the road around the Scarborough area when I was making my decisions. So thankfully I chose guitars. So I've been playing sort of on and off for the last, well, what is it now? Nearly 40 years. But yeah, so I've got a few hanging around, a few in cupboards here, there and everywhere. I need to get rid of a few. The wife's nagging me to clear up some space. So
talk about your guitar collection. We're not here to talk about your children. We're here to talk about equity release and equity release referrals from the mortgage broker population. And the reason why I felt it was important to get you onto the podcast, and because I do talk to quite a few mortgage brokers, and one thing that was apparent when I speak to them and start to talk about what they do is that they don't have an outlet for their equity release referrals. So because it came up when in my discussions with mortgage brokers, I just thought, what a great time to then talk about it on the podcast, just to really explain what you do, how you help mortgage brokers, how you help estate agents as well with their referrals, what the equity release market is like, what is the stigma around it, how to spot opportunities, and just general sort of overview of equity release and the benefits to mortgage brokers out there that don't see the need, but there is a need for them to have that third party element to refer to. So first one, Mark, do you think that's people don't have it because it's down to the stigma of equity release? Is that what you tend to find, come across, of why mortgage brokers don't have a referral set up with an equity release advisor?
Yeah, I have come across that. I've had various discussions with people's financial planners who have advised them initially that, you don't be doing that equity release. That's not a good thing to be doing. And then when we've had a full discussion about it and they fully understand it, they sort of reverse, 180. It's like, I didn't realize it was that simple. I suppose a lot of the planners I've spoken to were probably people like me of my age that, if you're not involved in equity release, your initial thought about it is what it was like in the mid 80s when we all said, don't go anywhere near equity release. There were so many bad examples of high interest rates, people being advised to take the money out to invest in coffee plantations, and people selling their homes, losing their homes on reversion plans. I mean, reversion plans, of course, is where they sell the home rather than just taking out a mortgage. They were selling their home, and so again, one of the biggest stigmas is people saying, "I don't want to lose my home." So yeah, it's one of those things that's got a longevity of bad press, but when people are fully up to speed with it and see how it is nowadays, fully regulated, separately regulated in terms of separate exams, etc. Obviously monitored by the Equity Release Council in that sense, and it's tightening up all the time. It's a totally different product, and for me, I don't understand why people. It's a solution in certain cases for people's life problems. So as an advisor, I don't want to be talking to somebody and thinking, well, I can't help you, or I've got no solution to your situation, when in fact there is a simple solution to their situation, which could be equity release, a lifetime mortgage. So for me, yeah, the stigma has been an issue. I think it's becoming less and less. I mean, there's a lot of marketing, obviously. You see it every 2 minutes on the television and everything else, and but yeah, even the clients, brokers, advisors, you name it, people have, until they understand it, have sometimes that reticence to think, you don't want to go near that. I mean, it's almost like the rates. They think the rates are huge as well. I mean, I'm just fixing a mortgage for a guy for life. It's 2.3% fixed for life. Wow. I mean, is that onerous? I mean, crikey Mick. He doesn't have to make payments. If he wants to make payments, he can. If he doesn't want to make repayments, he doesn't have to. But at 2.3%, it's not like the 8s, 9s, 10s of years ago, and people's, compound interest, the loan was doubling extremely quickly. It's totally different press now, but there are people out there, and this is why we're doing this, of course. There's people out there that don't quite understand it, see it as a negative, when in fact, all I see it as is a positive.
The awareness of the equity release market is growing, but what is the market? Is equity release a big thing? Like, what is the size of the market? Because I'm guessing that obviously with the pandemic and the house prices from a normal mortgage point of view and the house prices around that are increasing.
Well, the equity release market has been growing steadily for the last few years. It got to around £5 billion worth of lending in 2019. And slightly dropped last year to 20, but only slightly with the pandemic. I mean, bearing in mind, we couldn't go and see clients for so many months, and there was an adjustment period where people didn't know quite what to do. It dropped ever so slightly to about 4.7 billion. So it's hardly dropped. The number of products in the market is gone up massively just in the space of a year. The number of providers coming into the market's increasing. It's a huge market. It's only going to continue growing in that sense, as far as I can see.
Okay. So in terms of if we look at typical things, so from a mortgage advisor point of view, a mortgage advisor, mortgage broker, what are your typical referrals? What are your typical clients that you get referral from a mortgage advisor for equity release?
Generally, the main one I get is, as we know, the Bank of Mum and Dad are the 10th largest lender in the country. Okay, so in these days and age of lack of deposits, the biggest sticking point that brokers are having is coming across clients that just haven't got enough deposit, or they've got credit issues coupled with deposit issues that mean that they really need a higher deposit to be able to get a mortgage in the first place.
Right.
So in essence, I get quite a lot of contact from people that are saying, look, mum and dad have got a house, they've got no mortgage, they're happy to lend them some money, but they just haven't got any except what's tied up in the house. So quite often the referrals will be as straightforward as that, which would be, the Bank of Mum and Dad gifting.
You also help estate agents as well. So we're on the mortgage broker broadcast, so we're talking about mortgage brokers, but from an estate agency point of view as well, how does that work?
Well, from an estate agency point of view, again, most agents would think, why am I interested in equity release? What has equity release got anything to do with my business whatsoever? Well, for me, there's an awful lot, because one of the big things about equity release that a lot of agents don't understand, and a lot of brokers, is that you can take equity release on a new purchase. You're getting on a boat. I've got clients now that are 70 years old. Okay, they want to go into a bungalow, sort of retirement flat. Now, interestingly, the house that they had is less valuable than the flat or the bungalow. The bungalows are obviously in short supply, as are some really good flats. And so they've got a shortage, they've got a shortfall. So, but they want to move from the house. So again, one of our brokers was speaking to them and said, well, actually, equity release might be a way forward for you so that you can afford what you want. Why compromise at your age? Let's see what we can do from an equity release point of view, lifetime mortgage. So those clients are actually now buying with the aid of a lifetime mortgage. They're borrowing 40% of the value of the property. So they're using the equity from the sale of their existing property and then putting in, or we're getting a 40% lifetime mortgage on the lovely retirement flat that they're looking at. But it is a very, very nice flat on the coast that's much sought after. So that unlocks their dreams, because as far as they're concerned, happy days. We can afford something that we really want. that we're really going to enjoy for the rest of our lives. We don't have to make any payments on it. We can do if we want, but we can take the money and just let the interest compound up. And so for them, it's fantastic. What an opportunity to get 20 years plus of life in a really nice property, as opposed to trading down to something that doesn't meet their requirements, is not quite in the area they want to be. So
that's a great point. No, I think, like you said, when people are getting to that a certain age and talking about compromising, then it's not something that people do or want to do when they get to a certain point in their life. So it's, again, giving those clients the options. I want to do, Mark, just to trying to look at the quick wins of the spotting the opportunities to refer. So you talked a little bit about downsizing. So if somebody is looking to downsize and sell and maybe looking at moving areas, or they say downsize is probably not the straightforward one, but from a point of view of upsizing, then obviously you can equity release on a purchase, which is quite surprising for a lot of people that didn't know that you could buy using equity release. So what other things, bank and mum and dad, you talked about, what opportunities are for a mortgage broker to refer on that basis?
Well, there's always an opportunity, as I say. I think the key thing about opportunities are that when I first started as a broker several years ago, and I wasn't involved in equity release, but we used to refer, and all I did was every time I had a case, I would consider all the options for my clients. So sometimes spotting the opportunities is as simple as thinking about, okay, what are those? Where is my client situated in this? What is their position, and does equity release come into it? Do I rule it in or do I rule it out? And the other thing is, it's not for us to rule it in or out, is it? That's something else in my whole working life. You do get a lot of people that make decisions for clients and think, oh no, that equity release isn't right for them, or I don't like that equity release. So they decide for the client. They prescribe.
Yeah.
They tell the client what the client needs without letting the client make the decision. For me personally, it's just understanding that anybody over the age of 55 potentially could take a lifetime mortgage. Okay.
Right.
So at that stage, when your clients are over 55, you start to think, okay, well, what are the alternatives? And does the lifetime mortgage come into the field of view? If it does, let's consider it. If it's not right, we throw it away, but we consider it. People are using lifetime mortgages for all sorts of reasons. And it's not just one reason on its own. And that's the thing where the stats get a bit confusing, because you say, well, because they might take they might take money for 2 or 3 reasons. I might want to improve my property, but also go on a holiday and also gift. Okay. So I haven't taken it for one specific thing. I've taken it for 3 things, but I've benefited across the board there. Again, we talk about mortgage. Generally speaking, and with a lifetime mortgage, you should only have one mortgage, and it has to be your lifetime mortgage. So you can't have it as a second charge or second or subsequent mortgage. But of course, as we know, a lot of people with interest-only mortgages coming to an end, feel under pressure. Again, I've had a lot of referrals on that basis where people are saying, well, my interest-only mortgage is coming to the end in 3 months. Why people leave it so late, it's beyond me, but it's coming to the end in 3 months. And they've told me that they want me to pay the money back. And they're not going to give me any grace, and they want me out of the house. What do I do? Well, we go and take a lifetime mortgage. We take an interest-only lifetime mortgage, and we can make payments if we want, or if we don't want, we don't have to. All of a sudden, all that stress and strain has gone. That's assuming we didn't want to move. Obviously, if they wanted to move and then we're going to prepare to downsize, then we would look at that. But again, there's a lot of debt kicking around, as we all know. Now, consolidation of debt, people can use equity release for that. Any normal mortgage, people would release money for all sorts of reasons, and it's the same with a lifetime mortgage. You're just going to consider what that is, why, and whether there's anything more suitable. The only difference between the lifetime mortgage is that they've got to be of a certain age and they've got to have equity of a certain type of property, something that's obviously mainstream, that's saleable, not something linked to commercial or whatever else. But generally speaking, it's pretty straightforward.
I'm sort of counting the opportunities on as we're talking about them and as you're explaining. So, like the first one, not enough deposit. So somebody who's not got enough deposit, so they come with the 5%, but then they don't meet the criteria and they need 10% or 15% deposit. Has mum and dad got property? Has grandparents got property? Could they get, could we do equity release to then help them get the deposit? So with the mortgage broker, they could be turning these clients away saying, right, you need to go away and save an extra 5%, 10%, when actually there could be an opportunity to refer to you to then sort the equity release out, which then gives them the extra 10% that they need, or they might even give them 15% and let them keep the 5% to do the house up or get that little bit better area, or that 3-bedroom rather than 2-bedroomed, and like a house rather than an apartment flat or anything like that. So I think that's one sort of thing that I can sort of see opportunity wise from a mortgage broker point of view. The other one, like you just touched on there about the debt. So we get a lot of it, you get inquiries about debt consolidation, remortgaging debt consolidation, which again do they meet that criteria? Do they meet the income? Do they meet the debt? Is the credit score okay? And all those sorts of things, where they could, over the age of 55, they could be releasing equity to remortgage, to switch it onto a lifetime mortgage, and then pay the debts off as well, and they've got no monthly payments to pay that out. Like you said, they can service the interest if they want to, but they don't have to make a monthly payment on that. So I've got my mortgage clear, and I've got my debt consolidation clear as well, and I've got no monthly payments to make. Well, that's another great option for a client, and a great option to refer if you're a mortgage broker that's got a remortgage debt con that you can't place anywhere because of the client's situation. So there could be a lot of equity there. So that's another one. And then one big one, which I think is the interest-only mortgage. So you've got something that's coming to you, which is at the end of the day, like you said, you see them from experience, 3 months left, and they've got to pay their interest-only mortgage off. And then now start to look at the options, which is leaving it slightly late. But as brokers, everyone will get those people that will come into that situation and say, right, I've got 3 months to pay my interest on the mortgage off, and they don't meet the criteria of mainstream lending. They can't get the term, they can't borrow the amount they want to borrow, they've not got the income or anything like that. Then that's another opportunity to refer to you, because you can help them with their interest-only mortgage to pay that off. And as you said before, you can service the interest or not. So they're 3 big things there from a mortgage broker point of view that could get referrals to you or an equity release specialist to give their client options. And were they the big 3, Mark? Is that about right?
Yeah, I would say. I mean, obviously, there's a variety of other reasons, but that's the main thing. Gifting, home improvements. Home improvements is still massive. People improving the properties.
Right. So you're getting a remortgage inquiry that's looking to improve their home. That's probably another one in terms of the age of people as well. If they're having, rather than to move out of the home, they want to remortgage and borrow more money to put a bedroom downstairs, or if that's something that they have to do from a medical point of view and they don't fit the mainstream lending, then equity is another example, so like to refer. So great, I forgot about that one, Mark, to be fair. So that's another good one to look at, definitely. I think the thing is as well, and one thing that to be mindful of, which I know sometimes from a broker point of view, this is key for me, is that if you haven't got an equity release advisor or an equity release specialist that you refer to, and you haven't got that, then, and people start to look at that from a point of view of, well, I need to speak to an equity release advisor, and they do it themselves rather than being referred by their mortgage broker, you're just leaving that client open to be into the shark pool, shall we say, to be poached then by, well, maybe equity release isn't right for them, but they might poach them from another mortgage point of view, or steal their protection point of view, or refer them for something else. So if you're not servicing your client and looking at all the options that and the client's needs, you're leaving a little bit yourself a bit open for somebody to to take that client away from you.
Oh, most definitely. And you say that relationship's really important because, as you know, I had that with the person I used to refer to. In fact, I've still got a good relationship with them, but obviously I do the equity release now myself, and I've done for a few years. But initially, when I set up, I had a great relationship, and I was referring lots of business to them. But I had a complete trust in them and that they were doing the best for my clients. And it was that really got me into it, because gradually over time I did more and more referrals. I got to understand it more. I was more involved with my own clients taking it, and then thought, you know what, I enjoy that part of it, and I enjoy that. And that's how I went on to, shall we say, focus on it in a lot more depth than normal mainstream mortgages. But yeah, that's really important, that having that confidence. And as you say, you're not, we're never going to take anybody's business away from them. I'm not there. You would never, in a month of Sundays, if somebody was good enough to refer business to you, you would see whether or not that was something you could do for that client or not. But you would never step on the toes of an advisor that had passed you that business and start trying to look at their other situations. You never would do that.
You've got that referral system set up. You've got that agreement in place where they're referring it. Whereas if you don't refer it, you're just leaving that client open to interpretation by other advisors who you've not got that relationship with. Absolutely. And I think they say it's all about that relationship and that trust. And then one thing we haven't talked about, but we'll touch on it, and we won't go into too much detail about the commercials side of things. However, obviously it's about income as well. So the mortgage brokers that you work with and the estate agents earn referral commission as well, which is, so not only you've got a trusted referral agreement set up and you're sort of earning the client relationship on the back of that, you're also there earning the income as well from a referral. So that's just as big as important, especially if you're a self-employed mortgage broker. Generating income from other streams and other avenues is just as important as it is of earning from your own mortgages and your own protection sales.
Most definitely. And you've heard me say to all our guys, especially the new starters, especially when I got going, I was earning as much from referring equity release as I was from doing my own business.
I think that's it, Ismail. We can see that it is about spotting those opportunities. So it's about the income, it's about the relationship with the client, and all around that is giving that your client options of helping them to understand what options they are. And anything else to add, Mark, regarding in terms of referrals and spotting opportunities? Is there anything else we've not covered, Mark, today?
Well, obviously we could spend 3 times as long talking about lifetime mortgages, and I could sit here and talk about it all day. The one thing I would say is anybody just wants to chat about it, just give us a ring. We'll happily chat, and as you've seen before, we'll do Teams meetings with their teams if they want, so to educate their teams on it. Because at the end of the day, the more people you've got in your environment, this, I suppose, brokers or estate agents, the more people that have got an understanding of it, the more opportunity they'll spot, and the more chance there is for them to earn a good revenue from it. But
definitely.
There's always an opportunity. The one thing we didn't touch on, and I'd read something just the other day in one of the mortgage magazines, and they were talking about how easy mortgages were to get compared to post-COVID, pre-COVID, and whatever else. And apparently there are more rejections now on the over 55s than there were, because of course pension, looking at people's pensions into retirement and all this stuff, it's got more challenging. So whereas equity release is still as it was, and it's a very straightforward situation, from what I can gather, the actual over 55s options have reduced somewhat, or not reduced, but got tighter in terms of availability and affordability. So there's probably quite a lot of people that are later life looking at finance, finding it more difficult, which is where the equity release comes about. And the other thing, last thing on it, is that a lot of it's a fixed rate mortgage for life. So at the end of the day, they've got a lot of the benefits now. The benefits are just going through the roof as people are competing. As more and more people are getting into the equity release market and they're competing, they're throwing more and more benefits at it. But things like the option to pay 10% off per annum without paying any ERCs is there. Portability, you can downsize. There's all sorts of benefits. There's inheritance protection, as you know, downsizing protection. There's so many other benefits that have come into the equity release market now. So there are a lot of extras in there for clients' protection or well-being as well. So they're quite flexible products. And that's what struck me just in the year pre-COVID, post-COVID, the number of different products and benefits that appeared. It's just multiplying, So there's a lot more out there to suit the customers than there was only a year ago, 2 years ago. So, but no, okay. It's happy to have a chat with anybody that wants just to chat it through and just explain it in a bit more detail if that's what they need.
Yeah, do you want to just add your contact details then, Mark, just so if anybody does want to have a chat with you about equity release referrals from a mortgage broker point of view or an estate agency point of view?
Yeah, my mobile number is 077 899 41700 and my email is mark@csmortgagesolutions.co.uk, and always happy to help and give some assistance.
Fine. And we will tag you in on the posts on social media and things like that, Mark, so people will have your contact details. So brilliant. Mark, thank you so much for your time. Thanks for your input. Good to hear the relationships of working with the mortgage brokers and the estate agents you already work with. I think it's great that you've come across as like a trusted equity release specialist then for people to then think, well, I need a home for this. This is a great place to start. Let's just have a chat with Mark. And hopefully we can get some trusted relationships built up. Are you an experienced mortgage advisor looking to go alone and set up your own firm? Is owning your own brand and business important to you? Do you keep putting off the decision because you just don't know where to start? Let me explain the My Brand, My Way program. This is aimed at experienced advisors who are looking to go alone and set up their own brand and business. So what does the My Brand, My Way program offer? First of all, you still receive the rates you would as if you went direct to a network. These also improve as you grow. You pay a monthly fee, which includes the compliance, indemnity, CRM, and all licenses. You would still own your own brand, your own clients, and your own business. You are still creating your own legacy. The difference is that you get my help, support, and coaching in not only setting up your business and brand, I will also help you grow. If that is something of interest to you, please get in touch so we can arrange an informal initial discussion.